Ladies and gentlemen, good day and welcome to Repco Home Finance Limited Q4 FY26 earnings call hosted by Yes Securities Limited. Please note all participants are currently in listen only mode. There will be an opportunity for you to ask questions following the conclusion of the management's opening remarks. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajiv Mehta from Yes Securities. Thank you and over to you, sir.
Thanks, Hobnil. Good evening, everyone. Thank you so much for joining this fourth quarter and financial year ending March 31st, 2026 call of Repco Home Finance. We have with us from the management team Mr. T. Karunakaran, MD and CEO, Mr. P. K. Vaidyanathan, Whole-time Director and Chief Development Officer, Mr. M. Raja, Chief Business Officer, Mr. A. Palapandi, Chief Operating Officer, Mr. Ankush Tiwari, Company Secretary and Compliance Officer, and Ms. Shanti Shrikant, the CFO. With this, I pass on the call to Mr. Karunakaran for his opening remarks, post which, Swapnil, you can open the floor for Q&A. So over to you, Karunakaran, sir.
Thank you, Mr. Rajiv. Good evening to all, and I'm extending a warm welcome to this earning call to discuss performance of our company for the financial year 25-26 and way forward. Our board yesterday approved the financial results of our company for the financial year 25-26. Post approval, we have uploaded our financial results and a PPT containing our performance in our website as well as stock exchange websites. I believe you would have had a chance to go through our performance results and whatever the PPT we have uploaded in the stock exchanges and our websites. For those people who don't had a chance to see our results, I would like to go through our performance quickly before opening the floor for Q&A. Coming to the business, we have seen substantial improvement in the disbursement side, both quarter-on-quarter as well as year-on-year. We have seen improvement. During the quarter ended March 2026, we have disbursed 1,186 crores. Of course, this is the highest disbursement in our company. In the whole year, we disbursed 4,148 crores. Again, this is the highest disbursement. During the same period in last financial year, we have disbursed 3,284 crores. Our disbursement in 25-26 is up by 26%. If you compare disbursement of March quarter with the December quarter, we have done a disbursement of 1,064 crores, and March quarter we have done 1,180 crores. We have seen 12% growth in the disbursement. Overall, quarter-on-quarter and year-on-year, we have seen substantial improvement. Again, this financial year, September, December, as well as March, we crossed 1,000 crore mark disbursement in a quarter. If you look at contributions of loan disbursements state-wise, Tamil Nadu remain highest out of total disbursement of quarterly as well as yearly disbursement. Almost 60% of the disbursements are coming from Tamil Nadu. Last quarter, that means December to March, we have seen disbursement improvement in Karnataka, Maharashtra, Telangana, and Madhya Pradesh. Going forward, and expecting more disbursement from these states. If you look at loan book mix, we have not seen any changes in loan book mix. Out of total loan book, 71% of the loan book is HL and 29% is the non-HL. Total loan book at end of the financial year stood at 15,880 crores as against 14,496 in the last financial year. We have seen growth of about close to about 9.5 or 9.6. Even salary versus non-salary, we have not seen any change. As end of the March, out of total loan book, salary class accounted for 46% and non-salary class accounted for 54%. These are the from disbursement as well as AUM side. In respect of yield, overall yield as end of the March stood at 11.9% as against 12% in December 25 and 12.07% in March 25. If you ask me the breakup of yield, that also we have not seen any changes in the yield by assets or even profile mix. Salary class yield stood at 11.36% and non-salary class yield stood at 12.27%. I'm getting a yield of 11.16% from home loan and 13.44% from non-housing loan. This is the yield I'm getting from HL, non-HL and salary class and non-salary class. Last, 25-26, we dispersed 4,148 crores. Out of 4,148 crores, 700 crores is approximately 700 crores gone to regular to meet out the regular repayment, and about another 2,000 odd crores gone to meet prepayment, pre-closures, BT out and all. So net increase in our overall loan book is about
Karunakaran sir, we are unable to hear you. Okay.
There was some network issue.
It's
Sure, sir,
about
we can hear you now.
It's about 1,300 odd crores. In December quarter, in March quarter alone, we have seen incremental in loan book to the extent of 485 crores as against 360 crores in December 2025. These are from loan book. BT out or under control, and on average we have experienced about 35 to 36 crores per month BT out. BT in is per month. This is about approximately about 45 to 50 crores per month. This is our experience in last financial year. Net in net, that means BT out, BT in net to net, the gain almost on an average about 15 to 20 crores gain we got in a month in last financial year. Coming to asset quality, we have seen reduction in NPA. As end of the March 26, our NPA stood at 405 crores which was about 475 crores in the corresponding period of the previous financial year. Even quarter on quarter also, we have seen reduction in NPA. As end of the December, NPA was about 450 crores. GNPA, last year our GNPA was at the end of the 25, our GNPA was 3.26%, which we brought it down to 2.55% as end of the March 2026. Even we have seen substantial corrections, improvement in stage 2 assets also. At the end of the financial year 2026, our stage 2 assets stood at 1,115 crores as against about 1,410 crores in the corresponding period of the previous year. The overall book, the stage 2 assets stood at almost 7%, whereas the same was close to about 9.5% in the previous financial year. We have seen improvement in all the buckets, SMA 0, 1, 2, 3, all those things we have seen substantial improvement. The cumulative provision for all NPA as well as standard assets stood at 343 crores as end of the financial year 2026. Almost we are maintaining a provision coverage ratio of 55%. We are doing provisions as a conservative basis. As per we are following an Indian accounting standard model. As per model, we are providing more. As per the model, we need to provide in and around 26 to 27% for NPA accounts, whereas we are maintaining about close to 55% as a conservative and prudent manner. And additionally, the provision what we are made under IRAC norms is much, India's thing, much higher than IRAC provisions. Then coming to new loan, the book-wise performance, new loan book, that means loans given post 2022 is doing good. The overall NPA in the new loan book is about close to 1%. Even stage 2 assets in the new loan book is about 3.9%. Coming to the borrowing side, we started at the year beginning, we started diversification in our liabilities. During the current financial year, 25-26 financial year, we have issued a commercial paper to the extent of about 150 crores. In last quarter, we have done one pass-through certificate, and December Jan to March, we have issued a NCD to the extent of 125 crores. As end of the March, our overall borrowing stood at 12,215 crores. Out of total borrowings, almost 6.2% of the funding is coming from National Housing Bank, and 85% of the funding is coming from banking system, and about 5.39% is coming from Repco Bank. CP is accounted for about 1.2%, and pass-through certificate and NCD is accounted for almost 2%. Our cost of fund at the end of the year stood at 8.56%. I'm very happy to share that National Housing Bank has sanctioned 600 crores refinance facility to our company. In the yesterday board meeting, they approved the sanction. Very soon, we are going to execute the document and going to avail. Going forward, I'm expecting it will help the management to reduce our cost of funds. This is from borrowing side. Profitability side, yes, Few new expenditure items, few and certain one-off items affected our overall income and expenditure and profitability of the company. I would like to list such items. With effective from April 2024, as advised by the regulator, we have changed the interest calculations method. We are switched over to daily balancing method. Because of the change in the interest calculation method, our interest income is down by 11.53 crores in the current financial year. All of you are aware that labor code was implemented with effective from November. Because of implementation of a labor code, we charged 15 crores to P&L to comply with the new labor codes. And one of even expenditure like silver jubilee year, this is the 25, 26 is silver jubilee year for us. We celebrated silver jubilee year in first quarter, and we conducted the review meeting in person. Such expenditure will cost 5 crores. And again, CSR expenditure, normally we used to do 2% of the average profit of last 3 years. In the financial year 25-26, we increased to 5%. On account of this, we additionally charged 15 crores. If you would have 2%, it will be 10 crores. Since we have increased from 2% to 5%, the cost is, we had additional cost of 15 crores. All these items put together, it's come approximately 46 crores. Otherwise, my profit would have been more by 46 crores in the current financial year. Our Q4 profit stood at 129.11 crores as against 108.77 crores in the December quarter. Our overall year profit stood at 453 crores as against 449 crores in the last financial year. Ratios wise, our NIM stood at 5.38% as against 5.15%. These are the from profitability side. Our ROA stood at 3%. The cost of fund, I already told you, it's 8.56%. And yield on advances, I already told you, it's about 11.9%. So thereby we are maintaining a healthy spread of 3% and a NIM of 5.38%. And cost to income ratio stood at 28.71. These are the from profitability and ratio side. Network, we are having 242 branches, including SAT centers and branches. In the financial year 25-26, we opened 9 offices across the country. And coming dividend, all of you are aware that we have already declared an interim dividend of about 45%. And yesterday board meeting, board has declared 30% final dividend subject to approval of the shareholders. So our total dividend for the financial year 25-26 is the 75%, which is the highest dividend what we declared in the RHFL history. And these are the things I want to tell before opening the floor to Q&A. And I take this opportunity to thank all our valued customer, all shareholders, analysts, rating agencies, for bankers, investors, for continuous support. Now I open the floor for Q&A. Yeah.
Thank you so much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may click on the raise hand icon from the participants tab on your screen. We request participants to restrict to 2 questions per person and then return to the queue for more questions. To rejoin the queue, you may click on the raise hand icon again. We will wait for a few minutes until the question queue assembles. We'll take a first question from Vikas Kasturi of Focus Capital. Vikas, please go ahead and unmute your microphone. Vikas, please go ahead and ask a question. I think we have a connection issue from Vikas. We have our next question coming in from Amit Mehendale of Robo Capital. Amit, please go ahead.
Hi, thanks for the opportunity. Am I audible?
Yes, we can hear you.
Great. Thanks. My first question is on the loan book. Our earlier aspiration was to do about 25,000 crores of loan book by FY28. Are we still on track on the earlier aspiration?
Yes. Last year, I remember my first con call, I said 4,000 crore disbursement in the financial year 25-26. Yes, we have done a 4,000 crores disbursement. Current year, we are having a target of, we said we want to achieve a disbursement of approximately 5,000 crores disbursement. And I'm expecting a prepayment of about prepayment as well as repayment of about 2,940 crores. Out of 2,940 crores, approximately 2,060 crores will go to AUM. Remaining will set off by used to set off my prepayments as well as repayments. So my year-end target for the current financial year is about 18,000 crores. That means in nutshell, we want to disperse about 5,000 crores and we want to take it up to our AUM to 18,000 crores. Yes, at 2 years down the line, yes, we'll be in a position to achieve 25,000 crores AUM.
So basically, FY29, are we saying that we have about a year of delay? So in 3 years, we'll get there?
Yes.
And how much of inorganic loan book growth are we expecting?
No, right now, yes, we want to do some book buying, not on very big way or aggressive manner. To test the things, we may do this financial year about 25 to 30 crores, not more than that. Majority of my book is from our own book, not buying from the market.
Sir, if you look at it, our loan book growth is, significantly below our disbursal growth. And that problem, exists for some period of time now, either through BT out. So how do we, see that going forward? I mean, unless that problem is solved, the loan book growth will become a challenge.
Yeah, we have taken a lot of steps to arrest the BT out. Now the BT out are fully under control. The average BT out as of now is about 30 to 35 crores per month. BT out are really under control. Of course, to retain a good customer, we have reduced our interest rate also because of that. Our spread also slightly came down.
And Amit, to add on more to that, say considering that my portfolio or my organization has been in existence for past 25-26 years, I have quite a vintage book. So as you are aware in the market, my mortgage loan gate to gate is not more than 7 to 8 years. So I will have to expect and accept rundown of my book because of maturity alone. Even if I'm going to control my BT or the takeovers, my natural runoff of book will happen. We will have to increase our disbursement speed, and that's exactly what we are planning to do, and we are doing.
Second thing, in addition to Mr. Raja, majority of my loan books are non-salaried class customer. Substantial portions we link to non-salaried class customer. The habit of non-salaried class customer, business class people is as and when they are having a surplus cash flows in the business, they will come to us, prepay, and close the loan. As and when they require the loan, they will come to us. We have also experienced that those who are they are avail the loan for investment purpose. For example, buying the second house, third house, or something like that. After sometimes they are selling, pre-closing the loan. That is also we have experienced in the last financial year. The only way left with is prepayment, pre-closures in the 25 years of old company. It is very difficult to avoid. Market also that very much competitive. So the only way of left with is to increase the book is to disperse more aggressive in the disperse at the bit, but at the same time we don't want dilute quality in the disbursements, which is evinced from our performance of new loan book.
Right, sir. Thank you. And my second question is on CSR. Are we going to continue with the 5% spend going forward?
Right now, we don't have any plan. We want to stick it in and around 2 to 3%. I'll come out, I'll answer your question in next to my Concall. Right now, I'm not in a position to give the exact numbers. Right now, my idea is about 2 to 3%, not more than that.
Right. So could you elaborate why was it suddenly, raised from 2% to 5%?
Well, that last year is a silver jubilee year. So, we have done this thing.
Okay,
That
sir. Thank you.
we will also get a brand visibility. See, we are spending, we will get a brand. That is brand visibility we'll get.
Thank you, sir. That's it from my end.
Which will improve my business. Such only we invested in.
Yes, sir. Thank you.
Thank you so much. Requesting all participants to restrict to 2 questions only. And then if you have any follow-up questions, then you can return to the queue. We are taking a next question from Shubhranshu Mishra of Phillip Capital. Please go ahead.
Sir, good afternoon. Thank you for the opportunity. This particular number that we are talking about in terms of, sir, 2,000 crores of BT out prepayment, which was for the full year. What is the proportion of prepayment and what is the proportion of BT out here? And in this monthly run rate, sir, of BT out and BT in that we are doing, where is our loan going out, sir? Which all HFCs or banks are taking up these loans, if you can name them? And from where are we getting this BT in, sir? Thank you.
Yeah, Subharsha, I will take this question, Raja here. See, most of my BT outs are going to my public sector banks, obviously because of my rate of interest and the difference in the same. My BT ins are coming from HFCs, mostly from the segment of self-employed profiles. So that is what we have been witnessing, and I believe that will continue because the public sector banks are now getting aggressive and they are more concentrating on taking over a vintage loan. That is where we are bleeding. And when you ask about the percentage of BT in and BT out, net to net between BT in and BT out, my BT in are more than my BT outs. So as of today, I am enjoying on that. Yes.
No, sir, that is not what I asked. In the opening comments, I think what was mentioned is that there was 2,000 crores of BT out and prepayment. I wanted a split between prepayment and BT.
No. Okay, so BT in, as my boss said, on the BT out, I'm experiencing almost 30 to 35 crores per month. So for the year, it is almost almost around 400 crores per month. So for the year, I am having an BT out of 400 crores, and the balance is my repayment and prepayment and pre-closures.
Repayment, how much?
Yeah, I will clarify like this. See, last year we got a principal rundown now about approximately 2,670 crores. Okay, out of 2,670 crores, scheduled repayment, since scheduled principal repayment is approximately about 700 crores. Remaining thing, approximately about 2,000 crores, 1,900 crores is here. Principal, repayment, prepayment, pre-closures, everything put together. Of which BT out is about close to 400 crores. I hope I'm clarified.
Yes, sir. But what is the repayment and how much is prepayment is what I'm trying to establish, sir.
Prepayment, that means partial prepayment is roughly about 256 crores. Full payment is about 1,700, 1,650, 75 crores.
Entire foreclosure of loans is 1,700 crores, sir.
Yeah.
And this is a normal run rate, sir, which happens each year?
Yeah, it is a normal. Yes, we compared with this same number with the previous financial year. It is a normal thing. Of course, BT out is controlled in 25-26. Compared with the 24-25, BT outs well controlled in 25-26. Other prepayment, pre-closures are it's almost similar. I told you the majority of my borrowers are non-salaried class customer. As and when they have a cash flows, excess surplus cash flows in the system, they will come to us, pre-close, and they will take a new loan at a later date.
Understood, sir. And one last question is just a data keeping question, sir. If you can repeat the yields on salaried, non-salaried, and HL and non-HL, sir. Thank you.
Yeah. See, out of 15,879 crores is my loan book as end of the March 2026, of which salary class is about 7,410 crores. Non-salary class is 8,470 crores. In terms of percentage, salary class is a 46% and non-salary class is a 54%.
No, sir, the yield. Sir, the yield.
You are asking about yield.
Yes, sir.
Yield, approximately I'm getting 11.36% from salary class customer, and non-salary class customer, it's on an average, it is about 12.25 to 12.27, depends upon the profile of the customer, it will vary.
And HL and non-HL, sir?
HL, approximately, it's about 11.16%. Non-HL, it is about 13.44%.
Understood, sir. And the difference between our yield and APR is ballpark same, or there is a difference, substantial difference in APR and yield?
It's almost same, sir.
Thank you so much, sir. Best of luck for ensuing quarters.
Thank you.
Thank you. We'll take our next question from the line of Vibhor Talreja of Nest Amplifier. Vibhor, please go ahead with your question now.
Hi, thank you for the opportunity, sir. Sir, the question is very similar. Congratulations on the Silver Jubilee, but as investors for the last decade, we are sitting at 25% loss at a time when the index is up 3x. On the AUM growth for the last 5-6 years, the CAGR is 6-7%. Even this year, the guidance was 16,200. We have ended up at 15,850 or something. And while we are continuing to do disbursements, the AUM growth is much lower, which is where most of the other questions were. I heard the guidance this time also at 5,000, which is higher, but the AUM growth at 18,000. One is the sanctity of this, but I don't have many questions. I just wanted to share that one has been a long-term shareholder, but it has been a very difficult journey. And the entire market is not recognizing our efforts and they are not visible. That's why we are trading at 5 times P, very much unlike the entire market. And now we don't have an asset quality issues also. Our asset quality is doing phenomenally well. Our NNPAs are reducing, the credit costs are zero. But I'm sure as management you would have seen that, but sometimes it takes us to be a shareholder to realize the pain, so that we are putting in all the best efforts, because sometimes it's BT out, sometimes it's principal repayment, sometimes it's the kind of customer which should be there for all housing finance companies. But we have seen that, especially at the scale we are and the bank advantage we have, most companies have grown phenomenally better in a year, in a 2 year, in a 3 year, in a 5 year, in a 10-year phase. But somehow none of that happens. and we disclose very good data and numbers. We are very good proactively disclosing the numbers, but the AUM growth just doesn't come in. And that is what is the big game changer in a lending business. I'll pause here, and if there are comments that I should keep in mind, I would like to, but I just wanted to mention what I just shared.
Yeah, you are right. We also have that pain. We stand with you. But yes, our AUM growth, as we are looking at an organic growth, we are required to manage all the parameters and all the variables in the market. Like as I said, because of a vintage book, I have no other choice. If a customer comes in for a pre-closure after 5 years, 6 years, 7 years, I will have to accept it. Though I try to retain him, we do have a retention policy and all those things, but still, as you rightly pointed out, our book growth is getting restricted because of the vintage of the book and the closure. And also, as my boss said, because we being in more of a self-employed kind of a profile, customers do come in for bulk repayments quite often, and we cannot and we should not stop them also. So the only choice I have is to run faster, that is to increase my disbursements, which yes, we are trying to do it by also reducing our cost of funds so that I can get into more of an retail game. We are planning and strategizing. We'll have to wait for the future.
Any update on how this quarter is turning out to be, given we are in end of May?
Yeah, it's going as per schedule. We are having a plan to do disbursement of about 1,000 crores. We want to maintain the momentum. We want to maintain the trend of doing more than 1,000 crores in a quarter. The trend will continue. Yes, we are taking a lot of efforts to arrest pre-closures and prepayment. Mr. Raja rightly said, it's a 25 years old company. It's very difficult to manage prepayment and pre-closures. Yes, we would like to, going forward, we'll be very aggressiveness in the disbursement. One thing I want to confirm you that for the sake of growth, we will not dilute our standards and underwriting standards and quality in the assets, which is clearly means from the performance of the new book. Yes, we are putting efforts to arrest the pre-closures. Let's see. We are expecting improvement in going forward.
Thank you.
Of course, thank you for your compliment.
Thank you so much.
Thank you.
We'll again allow Vikas Kasturi of Focus Capital to ask his question. Vikas, would you like to go ahead now?
Yeah. Am I audible, moderator?
Yes, we can hear you. Please go ahead.
Yeah. Last time I did not get the unmute button. Sorry about that. So, yeah. So, sirs, hearty congratulations on this great quarter and a great financial year. Like you said, the highest ever disbursement on a quarterly basis as well as an annual basis. And the GNPA is also, you brought it down exactly like you said. Sir, I have been listening to all the questions and your answers as well. And I want to ask a question on the rundown itself. But I want to give you a data point, sir. From FY22 to FY26, so last 4 years, you have disbursed around 13,500 crores, right? And but on the slide number 25, our AUM from 22 onwards is only 10,000 crores. So roughly about 3,000 crores of rundown has happened on the new book as well. So that is about 25%. So I'm just saying, sir, rundown is happening not just on the legacy book, it is happening on the new book as well. And so while you've been saying because of vintage there is rundown, what explains the rundown in the new book, sir?
As I was saying, my customer profile being self-employed, I do get a lot of bullet payments or part prepayments. So that is something that we cannot avoid, and we are required to take it up. Your observation is right. So though there are no major pre-closures in the recent book, but there are a lot of part prepayments, and that is what is being observed by you as 25%.
Correct, sir. Even in the last financial year, you have disbursed 1100 crores, but the new book AUM has gone up by only about 800 crores. So so you can see that there is rundown even in the new book, which is happening, sir.
Yeah, you're right. Your data points are right. But from an answering perspective, it dwells more on my principal repayment, upfront repayment, because if it's a shorter term, my principal repayment will be faster, and also because of my part prepayments. Because we allow part prepayment even on the third month and fourth month of the loan. So I cannot do much about it.
In addition to that, we are following a robust credit underwriting standards, legal scrutiny, evaluation scrutiny, and all. Once my borrower approach any other financial institutions and say, I've taken a loan from Repco Home Finance, they will close their eyes and take. That's also a lot of prepayments is because of our quality in the asset. We are getting a lot of prepayments or taken over by other institutions.
Got it, sir. Thank you very much for your answers, sir. And once again, hearty congratulations to you.
Thank you.
Thank you. We have Pawan Kumar of Edelweiss with his question now. Pawan, please go ahead.
Hi, sir. Am I audible?
Yes, please.
Yeah, thank you for the question, opportunity, sir, and congratulations on good performance. I have two questions, one on disbursements, another one on the when we will see the GS2 reduction.
Yeah.
Pawan, we are unable to hear you.
So on the disbursement, sir, when you say 5, we'll go to 250 branches. That's 1 second, sir. Hi, am I audible? Hello?
Yeah, you are audible, but we are not getting the full question. Can you please repeat it?
Yes, sir. Just when you say 5,000 crores of disbursement, you are saying you will do 1.67, 1.7 crores per month from branch, right? So that is approximately you are talking about like less than 13 loans. And you have like 5-6 relationship managers. Can you walk us through the numbers how it will work out?
Okay, you are talking about per branch disbursement, right?
Correct.
Say per branch per month disbursement, it depends on the branch category, because we do have branches across the geographies like urban, semi-urban, and rural also. So the same standard cannot be applied to all branches. But having said that, my average disbursement per branch per month is anywhere between 1.5 crore to 2 crore. And in a given branch, I'll be having one BSM and one BH. So that is the kind of relationship or sales force that I have, and we are in the process of improving the productivity also. But I think we are at an optimum level with one BH, one BSM, and maybe one runner boy or something like that is what we are looking at, 1.5 to 2 crores. Of course, this year you can look at increased productivity. Having said that is what we are running for. Yes.
So can you give the split of that 1,600 employees that you have? Like how many of them would be in branches and how many of them would be actual sales managers? Or as you said, it's only 240 sales managers, one person per branch.
Say there are 240 branch heads.
Yeah.
And almost 180 branch sales managers.
Okay.
And we do have a regional setup and a corporate office also. So the exact breakup, maybe I will pass it on to you through my team.
So
Because
like,
on the credit vertical and operations vertical, we'll have to do a full bifurcation. Anyway, I will share the data with you. From sales perspective, branch heads will be one per branch, as you rightly said, and BSMs we have almost have 180 to 185 persons.
Sir, okay, basically two salespeople, right, between branch head and sales manager.
Yeah.
And you are expecting them to do almost 10, 11 loans per month at a 1.5 to 2 crores.
Yes.
Isn't that asked too much? Like
Oh, so in our kind of organization, we are with our DNA, we are used to do that kind of numbers. Because we have a branch, we have a processing setup also. So they source and we have a team in the branch to process the files. It is possible and
Sourcing
we
is
are doing it
entirely
also.
internal, right?
Yeah.
Sir, isn't hiring more salespeople a solution? Because all the other companies operate at like 3, 4, 5 salespeople per branch, and then they are able to, like Aptus is doing higher disbursements at a much lower AUM compared to you. I mean, and
Yeah,
their geographical footprint is almost similar to you.
Yeah, we can add on more salespersons, as you said. That is one of the approaches. But again, we are very conscious about our cost to income and overheads.
Sir,
So
but your
we are slowly
yields are
getting
so
there.
low. Like even you say your self-employed is high, it's only 50%, no, sir, 53%. Your yield is lowest among the affordable housing finance people. So I mean, like if you can add employees, I see like a great scope.
Yeah, we have noted. We already have it in the back of our mind, but it takes a bit of a time to get it implemented. Thanks for the notifications. Yes, we are noting it down. We will be working towards it.
Okay, so my second question is on the stage two. Like really great performance from bringing down to 7% from 9.7% last year. So FY27 end, stage two, can we look at something like a 4% kind of a number or a 3% kind of a number?
Actually, this is Vaidyanathan. Actually, we
Yeah,
plan to reduce below 5%. Because last year we have reduced around 2.7%.
correct.
Yeah, we wish to reduce below 5% at par with the industry. But we hope we will reduce it more. Because we are having a separate collection team and we have strengthened the collection verticals. Now we have started to focus on the rollback of accounts. Last year, if you say the absolute numbers, we have rolled back around 300 crores from 1410 to 1115.
Correct.
So this year also we have assigned a separate vertical for reducing the flow from B0 to B1. The initial stage itself, we want to restrict. So going forward, we can reduce the stage 2 accounts below 5% before the end of this financial year.
Got it. So can you explain the success
Pawan,
factor?
sorry
Okay,
about
I'll come
this.
back
If
in
you
the
have
queue.
a follow-up question, please rejoin the queue. We
Yeah,
have
sure.
few
Thank
other
you for the.
participants as well. No
Yeah.
problems. Thank you so much, Pawan. We have a next question coming in from Saurabh Dole of Fires Assets. Saurabh, please unmute and go ahead with your question.
Yeah, thank you. Good evening. I just have one question with respect to the dividends. You had a payout ratio of about 10%, if I assume full year earnings of 74 EPS. What is the outlook that you have on the payout, or was that just a one-time 25-year celebration because of which the payout was increased and it will now go back to its original trajectory?
Continue this. We want to maintain this trend. It's not a one-off thing like other what I discussed in my call. We want to, as a management, we want to continue this trend.
Okay, and again, it will have an interim plus final kind of a pattern because typically Repco is in the, just a final dividend is what
That's
it
what in
generally
mind.
has.
Right now, I'm not in a position to answer your question based on the numbers and other things. It will be decided. I'll be in a position to give exact thing on next to my call. But we want to continue this trend. We don't want to go back.
Sure, sir. Thank you so much.
Thank you. Thank you.
Thank you. We'll take our next question from Prithviraj Patil of Investec. Mr. Patil, please unmute. Yes, please go ahead. We can hear you, Mr. Patil. Please go ahead.
So, I just wanted to understand the pricing strategy and the cost of funds. So, if I look at cost of funds on a YOY basis, they have gone up by 10 basis in a declining repo environment. And also, if I look at the yield, the yield on assets that we report has gone up from an 11.7 in Q4 FY25 to around 12. So I just wanted to know our pricing strategy and how we think of yields going forward or the cost of funds going forward.
Cost of funds side, we have been consistently reducing it from the 8.75 last year, financial year, we have brought it to 8.5. So there is a consistent reduction in our cost of fund. And going forward, if at all repo is increased by RBI, our cost of fund might go up. Otherwise, not much of a change we expect. The yield side.
See, right now my yield is about 11.90%. It was about 12.07 in say March 25. Of course, we are following a risk-based pricing model. Majority of my borrowers are non-salaried class customer. We will ascertain based on the risk profile, the price will be determined. You know that we are sitting on a very tight and competitive environment. It's very difficult to maintain about 3.34% the spread what we reported in previous quarters, and to retain the good customer, we have to case by case we have to reduce our rate of interest. Number one. Number two, in this current financial year, we have reduced our benchmark rate twice. July 1st, we have reduced 10 basis points, and again February 1st, we have reduced our 10 basis points. All put together, we have seen reductions in the yield. Want to grow, it is not possible to maintain, good spread and growth, it will not come together. Want to grow, we need to sacrifice some portion in our spread. For current financial year, we would like to maintain a spread of in and around 3.2 to 3.25.
Got it, sir. Thank you.
Thank you. We'll take a follow-up question from Saurabh Dhole of Fires Assets. Saurabh, please go ahead.
Yeah, sir, with respect to this NHB sanction that you have, basis this particular transaction, by how much will your cost of funds go down by?
We expect it might go down around 10 pips, 10 to 15 pips around.
We got a 600 first refinance. We are yet to avail. We want to give priority in availing a refinance from NHB. It's because we will get a cost benefit. Of course, the cost will be decided at the time of availment, what kind of book dates we are giving to them. Whether it is affordable segment, non-affordable, whether it is urban, rural, so many factors are there. My guess is we will get a cost benefit of in and around 10 basis to 15 basis points immediately. That is my guess.
Okay, and overall cost of funds will go down by?
See, the overall cost of fund, our actual borrowing with the public sector bank is around 80%. Public sector bank, majority are the FCLR linked loans. So much of a reduction might not happen from that side. Provided the repo gets changed, they may also increase. So I cannot even any indication at this moment. The NHP will help us in reducing the cost of fund to 10 pips.
I have rightly said we are not expecting any reduction in bank borrowings. Yes, that the NHP refinance will help me to reduce our cost of borrowing for at least 10 basis points in this quarter. My guess is next quarter, I'm not expecting any reduction in cost of fund. Maintaining this cost of funds will be really challenging one.
Got it. Okay, sir. Thank you so much.
Thank you.
Thank you. We'll take a next question from Rajiv Mehta of Yes Securities. Rajiv, please go ahead with your question. Rajiv, please unmute your microphone.
Yeah, can you hear me now?
Yes.
Yeah, so very quickly, I think you touched upon Karnataka that the growth has improved, but when I look at Q on Q growth as reported by you, it's a 0% growth. Why and why it's not grown? There is another large market which is AP, which is again growing very slowly. So when you combine these two markets, they are 20% of the book, but the growth is not coming through in these markets. So when do we see even these geographies contributing towards growth, and hence the overall disbursement number looking better? Or is it or is it like we have not added enough people on the sales front, in these markets, and which is why the growth is not coming about? So if you can just give us some idea about whether these geographies will come back to growth and whether they can incrementally add to your disbursement volume per month or on a per quarter basis.
Rajiv, I'll take this question. Say on the Andhra, when I'm talking about Andhra Pradesh, yes, there was a requirement of team alignment, which we have done in the last quarter. That is Q4. We have already done that, and we have put a specific leadership there. So this year, I should see growth from there. And on the Karnataka front, the e-Kata issue is now fizzling down. So I should expect a lot more growth from Karnataka. And more than Karnataka, Andhra and Telangana, now we are seeing very, very green shoots from my Maharashtra, Madhya Pradesh and Rajasthan markets. So my non-TN is poised to give me good numbers for this year. Yeah, Rajiv, have I answered? Yeah.
No, I get that. So how are you? But I've not seen you adding more sales people, I think, off late in recent quarters, because when I look at your total employee count in the last 3 quarters, I think it's stable. So is it the fact that you are waiting for more productivity to first manifest, and then add, people in certain regions? Are you even thinking about adding, having 2 salesperson in a branch besides the BSM? Besides the branch head? I mean, see, the whole issue is that since you have, pretty high run rate of, prepayment, partial prepayments, and then pre-closures, even from, own money, because of your customer profile, we need to push the disbursement run rate per month, per quarter, much, much higher. And for that, we'll require people, we'll require pricing as a strategy, or maybe we'll require, new distribution. Can you please elaborate, what
Rajiv.
will be?
Rajiv, in non-TN branches, now we have done a major rejig of all my branches. So we are looking at high performance branches, and we have also put in place a city sales manager kind of a profile. And now we are looking at adding more feet on street. That is my direct sales team and others. We are looking at increasing my feet on street, which will be a low cost grassroots level employee. So along with all these efforts, we expect the business to increase multifold in these regions, and which should be evident in the coming quarters. If not in Q1, at least in Q2, I am looking at a much, much higher contribution from non-TN states, Rajiv.
Sorry, which states? Non-TN, yeah.
Non-TN states.
Correct. Just one last thing from my side. Yeah, did we have any, since you recovered a lot of NPAs and resolved them, roughly about 40 odd crore, because 5 crore was a write-off, 40 crore was, NPL resolution and recoveries. Were there any one-off interest recoveries also associated with it, which got booked, in the revenue line in this quarter?
Interest recovery. We have done in a lot of cases.
No, because but the block of NPL resolution was higher in this quarter of 40 crore. Generally, it is, so would the interest recovery element or number be higher, much higher in this quarter?
Actually, Mr. Rajiv, we know well that we are following Indian Ind AS. In Ind AS, even NPA accounts also we are recognizing as and when it's accrued. It's due for accrued. Not like IRAC. IRAC norms, once the account become NPA, we will not recognize. Whatever the NPA is already recognized, we have to reverse. In this case,
okay, so you were already recognizing.
Right.
It is recognized net of provision.
Net of provision we recognized, so that impact will not be there. Because of recovering NPA, my revenue will not go up substantially.
Got it. Yeah. So I am done. I think if there are more questions, we can take one or two. Yeah.
Rajiv, due to paucity of time, we will take that as the last question for today. And on behalf of Repco Home Finance Limited, this concludes today's conference call. Thank you all for joining us, and you can now click on the leave icon to exit the meeting.
Thank you.
Thank you all.
Thank you, Mr. Raju. Thank you for all participants for actively participating in this con call. Thank you.
Thank you, everyone.